If you depend on Social Security, SSI, SSDI, or Medicare-related decisions, April is one of those months that matters more than people think. Not because there's some dramatic surprise check coming in the mail, and not because of one viral headline. It matters because a lot of the noise around Social Security right now is distracting people from the real issues: the payment schedule confusion, the growing pressure on the system itself, and the very practical mistakes that can cost people money without them even realizing it. And that's really the reason to stay with me here, because this is not just another policy conversation from Washington. This is about whether people get clear answers, whether they file the right way, whether they miss benefits they were actually entitled to, and whether they get caught in overpayments or delays later on. For a lot of retirees, disabled workers, widows, divorced spouses, and fixed income households, that is not abstract. That is monthly survival. So let's start with the basics. For April, there does not appear to be any special disruption in the payment schedule. This is not one of those months where a weekend or holiday creates the kind of calendar shift that leads people online to start shouting about double payments. That kind of content gets attention every single time because technically there are months when two checks can land close together due to timing. But that is not a bonus, and it is not a surprise government increase. It is usually just the calendar moving one payment slightly earlier. For April, the important point is actually the opposite. Things look normal. No special extra payment story. No unusual double check setup that people need to chase. That may sound simple, but this is exactly where confusion starts. A lot of people, especially older viewers, are trying to keep track of real benefit changes while also filtering out sensational claims online. And when you're living on a fixed income, even a misleading headline can create false hope or unnecessary stress. So the first update is calm and straightforward. April appears to be a regular month, not a gimmick month. Now, where things get more serious is the larger Social Security conversation that has started heating up again. A new budget report has added fresh concern by suggesting the trust fund could run out earlier than some people expected, and that benefit cuts could come sooner, possibly by a little more. But based on the information we have here, the more consistent benchmark remains the Social Security Trustees report. And using that standard, the message is already serious enough. As of right now, the framework being discussed is basically this. There are 82 more monthly checks at 100%, and then the 83rd check would be cut by 23%. That is the kind of number people need to sit with for a moment. A 23% cut may sound like a policy statistic until you do the math. If someone depends on a monthly benefit to pay rent, utilities, food, prescriptions, gas, or insurance, a reduction like that is not small. It changes choices. It changes timing. It changes whether the month feels manageable or tight. And for households already stretching every dollar, that kind of reduction would be deeply personal. Now, to be clear, there are competing studies out there. Some say the timeline could be shorter. Some suggest the cut could be a little worse. But based on what we know from the information you provided, there is still uncertainty, and it would be irresponsible to present the most alarming version as settled fact. The fair way to say it is this: the official concern is already serious, a newer report may be even more pessimistic, and the next trustees' update may not be encouraging. That is a real issue. But it is still important to separate confirmed reporting from projections that are still being debated. And this is the part many people are tired of hearing, for good reason. Congress talks about Social Security over and over again. There are commissions, hearings, promises, blue ribbon panels, warnings about saving the program, and speeches about protecting seniors. But the underlying criticism here is that this pattern has been repeating for decades without meaningful resolution. A lot of talk, a lot of delay, and a lot of kicking the problem down the road. That repeated failure matters because every year of delay makes the choices harder and the public more anxious. But Washington is only part of the story. The other part is what's happening inside the Social Security Administration itself. And frankly, this may be the part everyday people feel first. One office that used to have close to 100 employees is reportedly down to around 60. That is not a minor staffing adjustment. That is the kind of loss that changes service quality, wait times, training, accuracy, and who ends up answering your questions. Here's why that matters. Social Security is not one simple program. People use the phrase Social Security as if it is one lane, but it really includes different benefit categories with different rules. Retirement benefits are different from SSDI. SSDI is different from SSI. Survivor benefits are different from spousal benefits. Medicare questions can intersect with benefit timing. Divorce can matter, work history can matter, military service can matter, filing dates can matter. So when understaffed offices start putting people on phones outside their strongest area, mistakes become more likely. And mistakes in this system are rarely harmless. A wrong answer can lead to an underpayment, which means you receive less than you should have. It can lead to an overpayment, which means the government later says you were paid too much and now wants money back. It can lead to a delayed filing date, which can cost someone a month or more of benefits they should have started earlier. And sometimes the person on the other end of the phone may sound confident while still missing a critical detail. That brings us to online filing, which is another issue people need to think about carefully. Filing online can absolutely be useful. In some cases, it's more comfortable, more private, and less rushed. For disability claims especially, it can give people time to slow down and complete things carefully. But here's the distinction that really matters. Online filing works best when the person filing already knows exactly what they are doing. If you know which benefit you want, if you've reviewed your earnings record, if you've considered whether you should file for retirement and disability at the same time, if you understand the timing, if you've checked for military service-related issues, and if you're confident you're not missing a protective filing opportunity, then yes, online filing may be perfectly fine. But most people are not experts, and the danger is not carelessness. The danger is that people do not know what they do not know. That sounds small until you see the consequences. A person may file online and think the job is done while missing a benefit category they could have claimed. Another person may report something incorrectly and trigger an overpayment later. Someone else may wait too long because they think they need every medical record first, when what they really needed was to protect the filing date immediately and let the documentation follow. One of the strongest practical examples in your notes is the disabled worker with kidney transplant history who is still working but struggling physically. That situation highlights something many people misunderstand. Social Security disability is tied to the ability to work, but that does not mean a person must literally be doing nothing at all the day they apply. If someone is working under the substantial gainful activity threshold, that can still allow the claim process to begin. The number mentioned here is $1,690 for a non-blind individual. So the practical lesson is not wait until everything collapses. The lesson is if your health is failing and your work is dropping below that threshold, protect your filing date as soon as possible rather than losing months because you waited for the perfect moment. Another powerful example is divorced spouse benefits. This is one of those areas where people quietly leave money on the table because they assume the rules are harsher than they are. The misunderstanding is often this: if I'm on disability and I claim a divorced spouse benefit, I'll lose my disability benefit or lose Medicare. Based on the information you provided, that is not necessarily true. In some cases, if the eligibility rules line up, the spousal amount can be added on top rather than replacing the disability benefit in the way people fear. That is a huge distinction, especially for older disabled adults approaching retirement age who assume they have no additional options. Then there's SSI, which can get even more complicated because it is a needs-based program. That means income and resources matter in a different way than they do for standard Social Security retirement or SSDI. The viewer question about spouse income inheritance and a possible trust is exactly the kind of real-world situation that trips people up. The calm takeaway here is not to panic, but also not to assume everything is safe just because a payment amount stayed high for a while. If income or resources should have affected the benefit and the agency has not corrected it yet, that does not necessarily mean the amount is right. Sometimes the system is simply delayed, and that can turn into an overpayment problem later. The inheritance issue is especially important because people hear general terms like special needs trust or ABLE account and assume one of those tools automatically solves the problem. Based on your notes, that is not something viewers should assume. In an SSI situation involving an inheritance, legal setup matters, timing matters, and spend-down rules matter. If someone gets a lump sum and is still on a needs-based benefit, this is exactly the kind of moment where they need qualified legal guidance rather than internet guesswork. There are also a couple of smaller updates that matter because they show how unpredictable administration can feel right now. Some people have reportedly received back pay by paper check even when direct deposit was expected. That appears unusual. It does not automatically signal a bigger policy change, but it is the kind of thing viewers should notice rather than ignore. If your payment method changes in a way you did not expect, that is worth checking on. And for those dealing with Medicare choices, there is a timing issue right now. With only a few days left in the current enrollment window being discussed here, anyone thinking about changing a Medicare Advantage plan or reviewing a Part D drug plan should do that quickly. If a person's doctors changed, prescriptions changed, or plan coverage changed, waiting can cost them flexibility. Sometimes people assume the plan they already have must still be the best fit. Sometimes it is, sometimes it is not. But reviewing it calmly before the window closes is far better than discovering a mismatch after April begins. So let's separate what is true, what is exaggerated, and what is still uncertain. What appears true is that April is a normal payment month, not a special extra check month. What also appears true is that the trustees-based outlook still points to full checks for a limited period, followed by a significant cut if lawmakers continue doing nothing. What appears exaggerated is the constant hype around double payments as if people are getting bonus money. They usually are not. What is often misunderstood is the idea that online filing is automatically safer or easier for everyone. It can be, but only if the person understands the moving parts. And what remains uncertain is exactly how the next official reports will shift the long-term timeline, and whether policymakers will actually take meaningful action before the pressure gets worse. So what should viewers actually do with all of this? First, treat April as a month to verify, not speculate. Watch for your normal payment. Ignore sensational claims about bonus checks unless the source is clearly grounded in actual rules. Second, if you are filing for benefits, do not assume the system will automatically catch every option you may have. Slow down, review the details. If needed, get help before you click submit. Third, if you are dealing with disability, especially while your work is becoming harder to sustain, do not delay the filing date unnecessarily. Fourth, if you are divorced, widowed, disabled, or supporting a household on a thin margin, revisit whether another benefit category could apply to you. And fifth, if you are on SSI and any inheritance, settlement, or household income change is coming, be careful. That is the moment to get real guidance, not make hopeful assumptions. When you bring all of this together, the April 2026 Social Security story is not really about a flashy headline. It is about something quieter and more important. The system is under pressure. The politics are unresolved. The staffing issues appear real. The filing process is getting harder for people who need clarity most. And at the exact same time, ordinary Americans are being asked to make high-stakes decisions that can affect their income, healthcare, and long-term security. That is why calm, accurate information matters so much. People do not need more panic. They need better explanations. They need to know when a story is real, when a claim is overhyped, and when a detail in their own case could mean more money, less money, or a serious mistake later on. And that's especially true for retirees, disabled workers, and families living month to month, because in that world, one missed detail is never just a detail. If you're watching this, I'd really like to hear from you. What worries you more right now? The long-term threat of future Social Security cuts, or the day-to-day reality of dealing with an understaffed system and getting clear answers today? And if you've tried calling an office, filing online, or checking a benefit lately, did the process feel easier or more confusing than it should have? Share your experience in the comments, because those real stories help other people realize they're not the only ones navigating this. And if you want calm, straight-ahead updates without the hype, make sure you subscribe, because the next round of Social Security reporting may matter a lot.